Great to be with you this Monday morning. Later in the bulletin, ratings agency Fitch assigns 4 Nigerian banks with subsidiaries in Ghana at B negative with stable outlook. We have more coming up on that. But first, though, some civil society organizations in the energy sector have challenged government to publish names of third parties involved in the Gold for Oil program. Some oil marketing companies have pulled out of the program due to unresolved concerns. Now, speaking to Joy Business, energy analyst and co-chair of the Ghana Extractive Industries Transparency Initiative, Dr. Steve Mantiao, said the government must publish names of all intermediary dealers in the program to promote transparency.
There is no disclosure in terms of who is financing the domestic gold purchase. 2, in this transaction, we are going to deploy the services of, or resort to the services of third parties. For instance, who is buying Ghana's gold? I mean, who is selling Ghana's gold on the international market? If it's a broker, then the broker services has to be disclosed. And the third, how much is the broker being paid, for his services? And how does it affect what we receive as a country in terms of returns?
Energy analyst and co-chair of the Ghana Extractive Industries Transparency Initiative, Dr. Steve Mantiao. Now, government recorded about 6.4% oversubscription of its treasury bills target of 2.63 billion cedis, but at an increasing cost. According to figures from the Bank of Ghana, interest rates surged for the 8th consecutive week, raising concerns about government's debt management strategy aimed at cutting Ghana's debt. Here's more in this report.
The government has been borrowing heavily on the money market since the beginning of the year, but at a higher cost. This is because it is the only source of borrowing. However, the rising interest rates are expected to increase the domestic interest payment of the government. The figures from the Bank of Ghana indicate that the yield on the 91-day T-bill went up by 0.11% to 21.26%. That of the 182-day bill also shot up, but marginally to 23.95% from 23.93% the previous week. The rate for the 1-year bill was, however, 27.82%. Meanwhile, the government got about 2.80 billion cedis from the sale of the short-term instrument. A little above 1.50 billion cedis was tendered for the 91-day T-bill, in which all was accepted. Similarly, about 982 million cedis were offered for the 6-month bill. All the bids were subsequently accepted. Again, the 308 million cedis tendered for the 1-year bill were also accepted.
That was a Business Desk report. Now, Ghana's program with the International Monetary Fund has received buy-in from all social actors, including organized labor. That's according to country representative of the IMF, Dr. Leandro Medina. There are fears that the government will struggle to implement the program because of the expected opposition from interest groups. But Dr. Medina insists they have been able to get all these actors on board.
Every mission that they visit Accra, we meet with the authorities, we meet with the Minister of Finance, we meet with Bank of Ghana, we meet with banks, we meet with the civil society. We have met with TUC, we have met with GUTA, with the unions. We meet also the opposition in the context of the Parliamentary Finance Committee. So in that sense, we are comfortable that we have been consistently.
You have the buy-in of all these actors.
With all the relevant actors in Ghana, where we have been able to not only to explain what we are really discussing and what are the aims of the discussion, but
Country representative of the IMF, Dr. Leandro Medina. Meanwhile, the visiting IMF staff is expected to engage more stakeholders this week as part of its engagements. George Afe has more.
The team has been in town since last week, and this is part of what they want to describe as regular country engagement. But for some, this visit has come at a time that Ghana has a full program with the IMF to try and turn around the economy. So apart from the regular people that the IMF want to meet, they also want to interact with other interest groups. They believe that this will help them bring all these persons to the table and capture their concerns as part of the IMF program. The staff visit will also help the team track how Ghana is doing to meet the program objectives and progress as expected to meet those key program targets by by the end of June this year. This is because when the team meets on November 1, 2023 for Ghana's first program review, they'll be looking at the June 30 quantitative and qualitative targets to see whether Ghana has been able to achieve them. Now, passing these targets will let the staff take their recommendation to the IMF board for approval and disbursement of additional $600 million for Ghana. Some have said this first review is very important because it will help Ghana realize the full benefits of this IMF program in terms of turning around the economy. The visiting IMF staff should leave town for Washington, D.C., USA, before the close of this week.
George, I feel with that report. Now, ratings agency Fitch has assigned 4 Nigerian banks with subsidiaries in Ghana a B- with stable outlook. The banks are Access Bank, Guaranty Trust Bank, UBA, and Zenith Bank. According to Fitch, the banks are robust with strong buffers. However, they continue to contend with US dollar shortages and the Central Bank of Nigeria's highly burdensome cash reserve requirement. Fitch therefore expects reform progress under the new administration, including the elimination of fuel subsidies and gradual liberalization of the naira. You are listening to the Joy Business Report. In other news, government has been urged to leverage green bonds to finance critical infrastructure projects in the country. According to partner Deloitte Ghana Yao Latte, these alternative sources of funding will speed up infrastructure projects. Speaking to Joy Business, Mr. Latte said moving to a green economy will motivate international lenders to finance projects.
Moving to green economy will help us in so many different ways. International development partners and financial institutions will more likely finance green projects than to give or support commercial lending. So historically, we benefited from, let's say, Eurobond and others. If you are in a situation like we find ourselves, and you go to market using the green bonds or using the green market initiative, and what you do is that you are likely to get investors and financiers who support the ESG initiative. Where we find ourselves, green bonds, it's actually something that we should be considering, and we should have been considering some time ago. But I think it's about time we consider these alternative financing products.
Partner Deloitte Ghana Yao Latte, Johnny Walker, the world's #1 Scotch whisky brand, has announced that Red Label and Black Label will no longer come in cardboard packaging as part of a wider packaging strategy with a focus on reducing, reusing and recycling. The initiative forms part of the brand's commitment towards taking bold steps to building a more sustainable future. Speaking to Joy Business as part of the Green Ghana Day celebration, Marketing and Innovations Director of Guinness Ghana Breweries, Estella Muzito, said her outfit will continue to take active steps towards championing sustainability.
We've started, very seriously putting in our best effort to really drive the conversation around environmental conservation. So last year, we made a decision globally, as a #1 Scotch whisky, to start reducing some of our packaging. Very well that the boxes that we pack in some of our brands, have to come from trees. And we felt, one of the first steps to